Good morning, I am Christel from Frans the Klerk, Independent Technical Analyst. Benny sent us an email and wanted to speak about Coronation. He said he wanted a possible buy opportunity and that we should have a look at the window between 50 and 51 Rand. Now, Benny, first thing, a Rand window doesn't really count, so I would not consider that a window. And firstly, and secondly, these are weekly graphs and I could not find a window between 50 and in that area. The only window on the weekly graph on Coronation is waiting here between the week of the 9th of April 2018 and the week of the 16th of April. And that window will close at some stage at 81 Rand 36. That is obviously a long-term target for Coronation, but that at some stage that share price has to close the window between 81 Rand 36 and 81 Rand 10. Now, let's look at that stochastic indicator. At the moment, we know the best place to buy a share is when the stochastic indicator is below a 20, in other words, oversold, and there is a positive divergence. In other words, that blue line has to break upwards through the orange line. Now, have a look here. At the moment, my blue line is still lower than the orange line. There is no confirmation of optimism yet, but we know that the stochastic is in an area that hints a possible buy opportunity. Now, this red line represents my 40-week moving average, and that is also the line in the sand for long-term investors that says above this level, and at the moment it is waiting at 49 Rand 52, the long-term sentiment towards the share will change to positive. And as soon as the share starts to consolidate below that 40-week moving average again, the long-term sentiment towards the share will change to negative. So we can see since about that week of the 14th of June, Coronation has struggled to change that 40-week moving average into a support and keep it one. And that is seen as negative. And then the other negative formation that I want to highlight here on Coronation is this possible inverse cup and handle formation. Now, the warning or the negativity around this formation, Benny, will only be confirmed when 46 Rand 46 changes into a resistance. And what is then the conservative target of Coronation? It is the length of the handle projected downwards from the neckline where that formation will be confirmed, meaning 42.38 is the conservative target. And the full target of the inverse cup and handle is the length of the cup projected downwards from the neckline of the formation where that handle will be confirmed, meaning 36 Rand 10 is a possible target for Coronation. But the negativity around this inverse cup and handle will be wiped off the table when 50 Rand 56 starts to change into a support. Above that level, this whole negative formation will become obsolete. Yes, I have got an inverse head and shoulder formation here that has been confirmed there above 44 Rand 49. It's almost played out completely, but this inverse cup and handle will be a close up. You need to keep a close eye on it to see whether it changes that level of 50 Rand 56 into a support, or does it start to change this neckline of 46.46 into a resistance. Let's hope investors make use of this oversold opportunity to buy Coronation then for the longer term. FNB 1998 wanted us to look at ABSA, ticker on our exchange ABG. FNB, we can see that the momentum to the top is clearly in place. We had a beautiful cup and handle formation a year back that was confirmed in November 2020. The share rose, pulled back, but every time it pulled back, the lows was a little bit higher, and that is seen as positive. That tells us that every time the share dips, there are buyers confirming, hey, they are interested to buy this share and to take it to higher levels. Now, at the moment, we can see that next strong support is waiting there at around 146 Rand 43. And we can assume that the momentum to the top will continue as long as that level of 146.43 remains a support. Yes, my stochastic is in overbought territory, which means there is the probability that the instrument might retrace as traders take profit. But what is important here, FNB, is that there is also a cup and handle formation. Beautiful massive cup handle formation. There was a false break and a whipsaw. And now the share is consolidating above that 136 Rand 22, which makes this cup and handle a possibility that can take ABSA a lot higher. Obviously, the conservative target is the length, and if I look at it, I think the conservative target has already been reached on ABSA, and the full target is the length of the cup projected upwards from the neckline with the handle, which takes us around to 210 Rand 13. Also, FNB, take note, my red line, that 40-week, is already a support, and that is the long-term sentiment gauge meter, and that is waiting at 129 Rand 26. Only below that level will I start to be concerned and say, hey, maybe as a long-term investor, I should consider taking profit here. But the graph still looks healthy, higher lows, momentum to the top, a confirmed cup and handle. I think that the share can maybe reach for higher levels. Rian wanted us to look at Stadio, and he said he's looking for a possible level to sell the share. Now, Rian, at the moment, we can see that there is a small head and shoulder formation that has been confirmed this week, that where the shares started to consolidate below 2 Rand 91. Very important, and we mention this every week, but it's quite important that we keep on reminding our viewers until we stop getting questions about when to buy or when to sell a share. No matter what indicator you use, stochastic, RSI, MACD, Williams percentage R, whichever indicator you choose to highlight overbought or oversold levels, that indicator tells you the probability of higher levels or the probability of a pullback. Now, an overbought or oversold indicator works like an elastic band. When it is oversold, there's a lot of room and a lot of scope for more upside and more strength. But as soon as it's pulled to the side and completely stretched, it can either snap, or, the strength in your fingers can't hold and you'll have to let go. So when we talk about overbought levels, it means in the case of a stochastic, it is sitting above an 80. So overbought levels tells us the probability of the instrument to retrace is there. It's more likely that their profit taking can take place. That means this is the place where you want to sell the share or consider a sell, right? When the instrument is oversold, in other words, on a stochastic, it's below a 20. Oversold means that elastic band has got a lot of scope. The points are very close to one another. And that is the place where you want to buy a share. Now, that's step one. Is it overbought? Is it oversold? Do I rather want to consider a buy opportunity or sell opportunity? The next step is to say, hey, when do I wait for confirmation? And that is when the divergence comes into play. Say, hey, if the instrument is oversold, I want to wait for that blue line, that's shorter, that K line, to break upwards through my orange line so that a positive divergence can be confirmed. That's when I want to buy the instrument. And hey, when I have a negative divergence, when that K line starts to break downwards through my orange line, that's when I want to consider selling. That's when I have a negative confirmation, negative divergence. The worst place to sell an instrument is when it is approaching oversold levels. Because now you're approaching levels that makes the probability for a bounce higher. So even if you're in a profit or not in a profit, you're wanting to sell a share that is telling you, hey, we are approaching levels that this instrument can easily bounce. All right. Having said that, the ideal place to have considered a sell on Stadio was when the share was overbought and the stochastic started to confirm a negative divergence. And then you can have a look and you say, hey, hold on. If I look at my candles, there was also a tweezer top. 2 consecutive candles that found resistance at the same place, more or less, and that was around 3 Rand 33. When I have confirmation on the Monday morning or the Friday close, on the Monday morning, I'm going to make my decision and I'm going to take my profit. Because at that stage, you should be in a profit, assuming that you bought it when it was oversold and the share didn't mess you around and you didn't have to top up. All right. Now we are sitting here with a left shoulder, a head, and a very small right shoulder, and we're already below our neckline. So now that head and shoulder formation is confirmed. I'm approaching oversold levels, which means it can go a lot lower, and I don't know if you are in profit territory already. So that makes it very difficult. So anyway, below a neckline, or confirmation of the head and shoulder, which is below the neckline, and that level is waiting at R2.91, that head and shoulder comes into play, which tells us the share, and we take the conservative target first, which is the length of the shoulder, left or right shoulder, you can choose either one, projected downwards from the neckline, can take us back to around this 40-week moving average, this red line, which is R2.62. There's also obviously the full target of the formation, the length of the head, projected up downwards from the neckline where the formation was confirmed, which takes us back to 252. On the chris-tell.com website, there's a couple of blogs, and one of them that I've written there tells us, when do I consider selling a share? When do I consider buying one? And I do suggest you maybe read it around. It will help a lot. But at the moment, with that neckline being confirmed, that tells me the share can go a lot lower. Now, depending what your view on the share is, you can say, hey, these oversold levels. I believe in the company. You know, whatever your decision was before you bought it, I'm going to hold on a little bit longer because I think once this oversold starts to turn around, that the share can easily bounce and go to higher levels again. But this head and shoulder can take it lower, and obviously always for long-term investors, that red line is the line in the sand. Below it at 262, the share will warn. But I think you're maybe too late to sell here because it's almost approaching oversold levels. You should have taken your profit there. But I don't know what your profit is. If you're happy with it, take it. We always say you cannot eat a whole cake every day. You'll become extremely sick. But if you have a slice every now and again, you will gain weight. And that's what you want for your account to happen. You just want your account to gain weight. And by taking the slices of profit every now and again, inevitably that account of yours will grow. Shiraz wanted us to look at Alibaba, but he said, hey, not the American depository receipt. He wanted us to definitely look at the one listed on the Hang Seng exchange. And if I look at okay, so you don't want us to look at the Alibaba group. The only one I can see at the moment, they should be almost the same here. And I just want to have a look here for you to see where the Hong Kong exchange one, but that's only the futures. It doesn't seem that we've got the actual Alibaba group. Let's have a look. No, it's not that one. I'm so sorry, Shiraz. It looks like we only have the New York Stock Exchange version, which is the American Depository Receipt one, and not the one actually listed on the Hong Kong exchange. So I don't know if you watched one of our previous shows, Shiraz, where we spoke about this inverse cup and handle formation. It has come into play, and I mean at the moment it is about how low can this share go? How low can it go? In other words, when can I start to consider taking profit yet? Step one, our indicator. Yes, it is in oversold territory, but I do not have a positive divergence yet. My blue line has not broken upwards yet, so I need to wait. And the other important thing is I do not have a turnaround candle. Yes, I've got two consecutive support levels there at around $158.14. But we can see in the past that this share, especially below this cup and handle, it's consolidated, pulled back lower. Gave me a dragonfly candle, pulled back lower. So technically, if a share gives you false positives, we have to wait for higher lows. So we have to wait for a bounce, a pullback, a bounce, pullback. And once those higher lows are confirmed, that's when we have confirmation that the sellers have dried up and only the buyers are left. So at the moment, my first sign of strength will only be confirmed above $186.26. But below this low of $152.80, we can assume that the momentum to the bottom can continue again. We're far below that 40-week moving average, which is a concern. And we can see with this massive even head and shoulder formation, Alibaba can go a whole lot lower.